All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about some recent buys that I made within some of my portfolios. And unlike the other videos, I have kind of my full account balance up here. We're not talking about my margin or my cash account. I want to show you guys all of my current holdings and my current kind of buys because within 3 of these Yieldmax ETFs, I made specific buys. And what I want to talk about in this video is exactly how much I bought of each. I want to go over my reasoning for buying each of these ETFs and kind of just my thoughts around the current market, my current positions. Are they currently at average prices that I want them to be? And what I'm going to do in this video is I'm going to go over each position with the current price point and the amount of shares to determine, am I satisfied or do I want to potentially build more with the current cash that I have? So if that does sound good, we're currently up to 6,706 subscribers. We crossed over that 6,700 marker, which is awesome. 447 subscribers in the past 28 days. We're holding this level nice and strong. So thank you to everyone who has subscribed and has done so. Awesome. So cool. One thing that I think is super cool to note is we look at SPY, which is basically the ETF that tracks the S&P 500. It's up about 9.64%. And over the past 6 months, we're actually beating the S&P 500 ETF SPY, which is 9.67%. So 0.03 up, which I think is totally cool. And hopefully more and more to go. But what I want to do in this video, go into my orders here, showing you exactly what I did over the past couple days. So it all started with DLR.U.TL. Let me tell you a little story here. So I purchased roughly about 480 shares of DLR.U.TO, which is basically transferring Canadian to American dollars. This is about $5,000 American. What I did was I took all of that cash, which equated to about was equivalent to about $6,000 USD, and I used $3,000. So now we're sitting roughly at about $3,000 after using $3,000, if you understand my drift. But basically what I did was over the past little while, I was buying up certain ETFs. I bought 60 shares of YMAX at $17.44. Just to put that in perspective, YMAX is currently at $17.70. So that was a pretty decent buy. Using some cash in my cash account, I just bought 4 shares. That was from the YMAX dividend that I received off 815 shares. Then I bought another $1,000 worth of YMAX the other day, 57 shares at $17.52. I bought roughly $1,000 worth of Square, 53 shares at $18.81. $18.81. Square is currently at $18.97. So we're up on that recent buy as well. And then I bought $1,000 shares of $1,000 worth of Babo, which is 57 shares at $17.41. $17.41. Babo is currently trading at $17.43. So a little bit up on each of these positions. So as I talked about on this channel, I mentioned a market crash kind of having the potential. So why did I decide to kind of go against what I said and buy a bunch of these positions? Buy basically $3,000 worth of each of these positions. Well, I'm looking at the overall market. The overall market is slowly having a little bit of a rebound off of kind of the low that we had. We had a very fast drop, which to me seemed extremely bearish. I was preparing for the worst. I was building up the cash in my portfolio and I was preparing for the market to crash even further. We're kind of having a little bit of a rebound here. And to also kind of put things in perspective, I did also acquire about 100 shares of Crash, which is the Tesla short ETF. Sorry, the TSLY short ETF. So why do I mention all of this? I mention this because I'm very uncertain of where the market is currently headed. We have really big down pressure. We're currently in a little bit of an uptrend. It looks like we're going to hit back up to this $605 marker where the market's going to hit a bit of a resistance and either bounce up or down. But basically, the reason why I bought is because I don't know where the market's going to go. What I've been doing is I've been building cash in my portfolio. I used half of that cash to average down my positions and get better average prices. For example, in SQY, I got my average share cost below $20. It's now at $19.79 for 201 shares. When I look at PayPal, PYPY, I have not bought any more. I'm currently sitting at 53 shares. I have an average share price of $18.66. We're currently down in that position a little bit, but I've been paid out a couple dividends, so I'm actually up on PYPY. When we look at Babo, I have 250 shares now below $18. That's exactly where I want to be for Babo, because I do believe that long term it has amazing price potential to the upside. I also believe in the underlying company, which is Alibaba, which of course definitely helps with the argument as well. So 250 shares, that's kind of the biggest individual Yieldmax ETF that I own besides YMAX. And that's at $17.88 per share. That to me is a beautiful share price. I'm very happy with where that currently is at, judging that just even in the past little while, it was up to about $25 when Alibaba, the underlying stock, hit about $115. Now the next is YMAX. YMAX, I currently have about 800, if I can let's see if I can, perfect. I have about 825 shares now at an average share price of $17.67. So I've gotten my average share price below $17.70 for 815 shares. That is awesome. That's exactly where I want to be with YMAX, and anything below $17.70, I'll likely look to buy. Sorry guys, I got to stop the video and I got to buy YMAX. I'm kidding. But basically, the reason why I bought all these ETFs is because they were much below my average share cost, and I'm definitely looking to hold these ones for the long term. SQY, I've held for over a year, and it's produced me an 80% return in my CIBC portfolio. So it was a fantastic dividend ETF for myself, and I like the underlying company. I do believe that they're in potentially a good spot right now for a breakout. That's why I'm holding, and that's why I'm holding a lot of other Yieldmax ETFs like Babo, like PYPY, and as well, that's why I hold Crash. Now, Crash is a little bit more uncertain. My whole position with Crash is I have 100 shares. I bought it at $5.85. I'm currently up on that position a little bit. It's sitting at $6.12, but it all depends on where Tesla is going to go. Currently, Tesla was off of a little bit of a high, about $488, bounced all the way down to $415. It is now back up to $450. So for myself who holds Crash, Tesla could potentially go to $500 and beyond. What would I do in that position? I would double down on Crash. I believe that Tesla at $500 seems a little bit overvalued to myself. And because I personally believe it's overvalued, that's why I'm buying Crash, which is the short ETF. When I look at Tesla's price point over the past year, you could see the huge run up. It was very stable about this $170 to $200 level, and over the past 5 years you could see Tesla's had some huge run-ups followed by some major down movements. So whenever we see a huge run-up like this in Tesla, I'm potentially looking to take advantage of the downside, and I'd much rather be holding Crash right now than holding TSLY. So that's why I'm investing in Crash, and if Tesla goes up, then I'll likely double down on that position. That's why I only bought $500 worth. You can see my market value here, $600, because I can double down on that position very easily and protect myself if Tesla does rise further. So you always have to think about your position size in the future. But this was the reasoning why I decided to buy $3,000 worth of all these ETFs. And I don't do this to flex by any means. I just want to show what consistent investing over time does. When I look at the past 6 months, I really started this portfolio about 6 months ago, and it's grown to over $46,000, which is cool. But it just shows how consistent investing over time can put you in such a fantastic position. And I don't believe that just sitting on all this cash and waiting for a market downturn is the best thing to do. We buy when we see opportunities. There was a little opportunity that presented itself here, so I used half of my cash. Remember, I have 2 accounts. I have a cash account and a margin account. And I have a lot of potential margin debt that I could get into to fuel buying in those accounts. I have over $12,000 that I could potentially use. I have $4,000 in cash, but I have $12,000 in terms of margin debt available that I could use if I do run out of cash. Will I use all $12,000? Likely not. But the reason why I bought and I continue to average down and put money into the markets even though it's a little bit uncertain is because small steps over time create big movements. And the cash that I will now be receiving from YMAX is 825 share position as well. SQY, a 200 share position, and BABO, a 250 share position. This is all going to give me a lot of cash to further invest and buy more and more. And just because the market is trending up, just because the market is uncertain, doesn't mean you shouldn't be buying. It means you have to protect yourself and you have to be smart and know when you want to buy. I want to buy, but I want to save some cash in case we see a market downtrend. And I'll continue to pour cash. I'll continue to buy, but it must be at levels that I feel comfortable with, that I think are appropriate, and in underlying stocks and ETFs which I believe have potential. If I don't believe they have potential, then I wouldn't be buying. And a great example of this is ULTY, because ULTY, about 164 shares at an average share price of $10.60, and it is currently sitting at $9.22. I have not purchased any more ULTY because I personally don't believe in the position. It's performed poorly. It was one that I kind of decided to enter to put some skin in the game, but the strategy has not worked in terms of Yieldmax strategy with the 15 to 30 underlying stocks that it holds. And so I have not bought any more, but I've seen growth in YMAX. Although it says I'm up $8, I'm up a lot more. YMAX is the main driver of my portfolio and why I'm up almost 10% over the past 6 months, which is equal to about $4,000. I've seen great things in YMAX, and that's why I continue to pour in cash, even though YMAX trends up over time, it trends sideways, and you know what? It feels like I'm always buying at an all-time high, but it continues to trend up with the market and produce returns, and that's where you got to put your money. You got to put your money where you believe there's best returns, and that's where I feel that we're currently at with SQY, BABO, and PYPY. But of course, don't take my word for it. I'm just a guy on YouTube. I'm sharing my journey and what I do. You can see the dividend yields here, and the great thing about buying all these ETFs when kind of prices fall, and the current average prices that I have is when their prices rise and they potentially start to pay out more and more dividends, we're going to see our income skyrocket. Right now, we have YMAX paying 36%. We have SQY. It says 115%, but that's going off the last dividend yield. That is likely to drop by a decent amount, likely pay under $1. I'm looking at more at like 60 cents per share. We have BABO, which is paying 54%, likely also to drop per share. Crash, which I hold very little, it says 77%, likely to fall. PYPY, 43%, which should be about the market that it's paying. So a lot of these ETFs that I'm buying are currently paying lower dividends than what I believe they should. And so it'll be cool to see as we grow the positions, because a little dividend increases in each of these ETFs is going to result in huge monthly dividend increases. So it'll be cool to see as we go over the future. I'll definitely tally everything up for you guys and create another video on that because that's very exciting. But these were my kind of 3 buys that I did, and then as well Crash, which I added a little while ago, just an update on that position. So if this video served you well and you guys enjoyed, remember to subscribe and join our page. We're up to 6,706 subscribers. So thank you very much for joining. Thank you very much for sticking around to the end of the video, and I hope to see you guys in the next video.